All right. Cool. All right, go ahead.
Thanks, Tony. Thanks for getting on this call with me. I always like to touch base, once a quarter with the loan officer in the Cincinnati market to kind of go over, mortgage rates, what's going on in the mortgage field, what can we see. Obviously, we had a lot of recent changes with the new president coming in, end of the year, getting ready to go into 2021. So I always want to get your professional expertise and perspective on what's going on for those prospective buyers out there, borrowers who might be looking to make a purchase or a move here in the next 3 to 6 months, and what they can expect in regards to mortgage rates and where we're at and where we're headed. So if you want to give us a kind of overall view on what's going on.
Sure. Yes. I mean, we're in a really environment right now. A+ credit right now, you're looking at being able to get a rate in the 2.5% range, which is unheard of. I've done this now 17 years and never been a part of an environment where rates are so low. So, I would encourage anyone that's on the fence to certainly look at, trying to buy something sooner than later. That being said, home prices are going to continue to appreciate as well. So, I think you're going to see rates higher a year from now and home prices higher. So it's a better time to buy a home now because the affordability is better now than what it's going to be in the future. You mentioned the change in administration. I think we're going to see some new housing stuff rolled out in the next, 6 to 12 months. I think you could see the upfront MIP on FHA loans get reduced. That was something that President Obama tried to do when he was in office. I think the FHA PMI right now, it's on the loan for the life of the loan. I think that eventually that's going to go away. I think that you'll be back to being able to have the PMI taken off at that 80% threshold or 78% threshold, which is good for buyers. You don't want to have 50% equity.
Sorry, I didn't mean to cut you off, but for the layman's terms, what does MIP and PMI mean for those who don't know what that means?
So PMI is private mortgage insurance. Typically, if you're buying a home and you're putting less than 20% down, you have to pay insurance. It basically protects the lender from default because you don't have a lot of equity build up. Conventional loans, the PMI falls off when you have 20% equity, but FHA over the last few years has changed it to now where it's on for the life of the loan. So I think that you'll see something like that reversed where the PMI will fall off once you reach a certain threshold in terms of equity. I think you might see some first-time homebuyer incentives rolled out. President-elect Biden mentioned like a $15,000 incentive for first-time homebuyers. So I think you'll maybe see some tax credits get rolled out to really help build home ownership in the United States. So I think there should be some good things that people can be excited about. But like I said, I wouldn't wait for any of that to take place. I would take advantage of the low rate environment that we're in. Home prices are going to keep going up, and I think rates inevitably will go back up with it.
Gotcha. So we've had a couple of mutual clients that have taken advantage of this recast program, which I'm going to have you explain. In this environment that we're in right now, obviously it's a low inventory, low supply market, and a lot of, I would say, seller and buyers, people that are looking to sell and buy in the current market we're in, and sometimes are faced with the challenge of, how to figure out the timing. Because it's such a low inventory market, they might be able to sell quickly, but it's been more of a challenge and taking more time to find the next home. And they're kind of torn on how do they navigate, the timing of that. So you guys have a great program which allows someone to buy first, so they can take their time, put a new home under contract, and then sell thereafter, which makes the transition way more smooth. So can you explain kind of what that program is and how you've seen clients take advantage of that?
Yeah, absolutely. And in a competitive environment that we're in, where most listings are getting multiple offers, the last thing a seller wants to do is accept a contingent offer where somebody has to sell a house. So one really nice alternative we have, it's called, like you said, a recast or reamortization, will allow someone to get a conventional loan to buy a new house as long as they can come up with a down payment of 5% of the purchase price. Now, we touched on PMI before. The downside is, yes, they're going to have to pay PMI on the new loan, but it might only be for a month or two, because when they sell their house, they can make a one-time lump sum payment to principal, and they can get out of PMI. They can, whether they put, 5% down and then the extra 15, or 5% down and then just a large lump sum, they can get out of PMI that way, and the loan gets reamortized. So the principal and interest payment goes down at the same time. So, on a $300,000 house, they would have to put $15,000 down. They finance 95%, but then if they sell their house and they can put the other, $55,000 or $45,000 down to get to that $240,000 number, not only does the PMI go away, but the payment goes down because the principal and interest gets re-amortized based on the lower loan amount. So they can do it once over the life of the loan. The only caveat, it has to be at least a $10,000 payment. But I think it's a really good alternative for somebody that has equity in their home but doesn't want to have to sell first to buy.
Is there any special qualifying requirements for that loan, or is it just typical, normal, conventional underwriting?
Just normal conventional. Their debt to income ratio has to be at 50% or less. They do have to qualify carrying both of those mortgages. So case by case, some people will, some people won't. But the majority of the people, versus having to go out and get a bridge loan, it tends to be a better alternative because they can qualify 9 times out of 10 without selling. So it's just a matter of coming up with that 5% without tapping into their equity.
The issue with the bridge loan is you basically have to get an appraisal on both properties, and you're basically combining 2 mortgages into one in a way. And you're paying closing costs essentially kind of twice, aren't you? Or like when you do the bridge. So, I mean, obviously it's an option, but I like this recasting as an alternative because you don't have to combine 2 mortgages. People get scared by the idea, oh, I might be carrying two mortgages. But the reality is, in this market, as long as you're pricing your current home correctly, it's going to sell quickly. So I always tell my clients that are doing this, it's going to be a brief time. And I also inform my buyer borrowers on the next home, the first payment isn't due until 30 days after closing typically. So you almost have like a month grace before your first payment is due. And within that time period, we should be able to sell your home. Again, in the current market that we're in, as long as you take my advice on where to price the current home, it'll move quickly. So it's a very low risk, and it's a great way to be able to make an offer on a new home, non-contingent. Because in this market, I mean, I've been on both sides, representing both sellers and buyers. And if you're making a contingent offer, it pretty much goes down to the bottom of the offer list, even if it's above asking price, just because sellers don't want to take on that inherent risk of a client trying to make their offer contingent upon their current home selling, which they have no control over, what the house can be priced at, how long it's going to take. So they just choose not to work with those contingency offers. So this is a great way to bypass that. So for you, if you're speaking to the audience here that's listening to this video, if you're looking to sell and buy, this is a great way to be able to do both comfortably, with a smooth transition, focusing on the buy first and then selling once you have a house under contract. Thanks, Tony. Is there anything else you want to add about what's going on, what's to come, or anything?
No, I mean, it's been a great year for the market and the industry. And, again, we're in a low rate environment, and, home prices are going to continue to go up. Most areas are looking at upwards of a 25% value increase over the next 5 years. So, I can't encourage you enough. Now is the time to buy. I wouldn't prolong it. I wouldn't, get frustrated over inventory. Just kind of stay out there and stay present. Make sure you're working with a great real estate agent like yourself to help with your search and give you some insight with potential listings before they maybe even hit the market. I think any advantage you have, you need right now. So I think it's key to work with a great real estate professional and kind of give you the leg up on the competition.
For those who may not be familiar with AnnieMac, what can you talk about AnnieMac as a whole? How you guys compare it to? Because I know a lot of times some people are like, well, I'm going to talk to my bank. I was like, well, that's fine. It's good to get a couple opinions, but I always like working with a local mortgage broker here that's in town. So I'll recommend someone like you to them who are looking to kind of rate shop or mortgage shop. What can you tell people who may not be familiar with AnnieMac on what you guys do?
Yeah, I mean, we're going to be more customer service based. We know that, you can go anywhere for a mortgage, but not everyone is equal. We want to make sure that you close on time first and foremost. We want to make sure that you have the communication you need. I mean, we're going to cater to you. We're going to be available nights and weekends and 24/7. Whereas, your local banks might be 9 to 5, Monday to Friday. If you need a pre-approval on a weekend, we're able to accommodate. If you need payment estimates or somebody to call a listing agent to kind of give you a leg up on a multiple offer situation, we're going to be there for you every step of the way. So our job is to kind of put you in the best position as a buyer to get the home and to win in a multiple offer situation. Once you go under contract, like I said, we do everything we can to make sure you close on time and hassle free. It's a stressful process enough, so we try to kind of prepare you, do our job to make sure that you don't have to worry about missing closing dates. And we have relationships with local title companies and appraisers and real estate agents. So I mean, it tends to be a pretty seamless transaction for us.
Yeah, speed is key in this market right now. It just seems like the market just moving way quicker because of the low inventory market. Something comes on the market, if it's priced well and shows well, it's not going to last long. So I tell my buyers that you have to be patient, waiting for the right home that checks all the boxes that you want to see it in person. But if it does check all the boxes, we got to pounce. We got to move quickly because you are seeing homes selling within hours or in the first day or within the first 48 hours. So it's always good, again, talk to a loan officer, get pre-approved up front, even before looking at homes. That way you're ready to go and pull the trigger once you do find the right home, because we do have to move quickly.
Yep.
So thanks, Tony. I really appreciate everything.
You're welcome.
In this post, I'm going to put Tony's information. If you want to reach out to him, talk to him about the mortgage options that they offer. And as always, feel free to reach out if you want to get set up on a custom search.
All right.
Thanks,
I
Tony.
appreciate it. Thanks, Jeff.
All right, bye.
Bye.
Cool, man.
All right. Cool.
Yeah, I really appreciate that. If you want to send that file, I guess you can either do like Google